Welcome to Stuck, Time to Improv. I'm Mary Scott with Business Riff, and I want startup businesses to be wildly successful. So today I'm very happy, and you guys are going to want to listen to this, to be talking to Greg Pruitt from Moduscorp. We're talking about money, guys. We're talking about funding options for startups. So welcome, Greg. Thanks for coming.
Thank you for having me.
So tell us a little bit about what your company does for people.
I've got my degree in business law, and then my mentor, he's been lending for over 35 years, and he has his business degree in financial law. But by no means are we lawyers. We've been in with a couple of individuals that we have on our team. We have over 65 years of experience. Mm-hmm. And the one thing that we have noticed in all the years that we've been doing business is that there's two reasons why businesses fail: either lack of experience or it's lack of funding. Businesses usually don't plan to fail. Right. They just fail to plan. That's usually what happens.
So let's talk about startups, because they always need money. But what are you looking for in a startup? What kind of startups would you actually fund and why?
We can help any startup or any early stage business. It really doesn't matter to us. For example, my wife, she started her property investment business in March. Mm-hmm. And then in April, she was guaranteed funding for $130,000.
So what kind of information or documents or background does a startup have to have before they start talking to you?
We will send them our fraud protection network, and it's a link. They'll fill out the information. Now it's going to be a soft pull. I want to make sure that I'm clear on this with everyone. It's a soft pull. It's not going to be a hard pull. If it's a hard pull, it'll take points off of your personal credit. We don't want to do that. This is going to be a soft pull. It's going to get household information overall. So anyone over the age of 18, if they're working, you want to make sure you put the overall household, because we can use that as leverage to get you even more funding, because there's a lot of income coming into the home. One of the criteria is you got to have at least making $30,000. Another criteria, you can't have any back pay for child support, because we feel at Moduscorp and at Lincred, one of our fintech partners, if you can't help your family, we feel that we don't want to help you. We're just wanting to get the information so that we can get the ball rolling. Once we get that rolling, we'll have a conversation, and then we'll do a survey. And this survey is a custom strategic plan. It is literally a fingerprint for their passion, whatever their business is. I like to say, my baby. This is my baby. It's your baby's fingerprint. Just like any fingerprint for any person in the world, no two are alike. It's the same with business. If someone else is in the same business you are, I can guarantee you, both of you have two different set of fingerprints for your baby or for your business.
Okay. Is this the business plan that we hear so much about that you want people to come with already, or do you help?
No. We do it. We do it all. It's a custom strategic plan. So they'll give us some information. We will ask questions. And then once we fill it out, it'll go through our SBS. That is the Senior Business Strategist Department. They're the ones who approve it. And we have an approval rate of over 85%. So that's really high.
Most of the time when investors fund a startup, they want some return on their investment. They want to get a percentage of equity, or they want to be able to recoup their money plus within 3 to 5 years. I mean, there's those kinds of things that we talk about when we talk about angel investors or venture capital. Yes. So what is your particular return on investment?
I'm so glad you said that, because that is going to be a perfect segue, because I'd like to talk about the banks, the SBA, and the VCs. We do what the banks won't do. Usually the banks want you to have a high paydex score for them to lend you money. A lot of times, or 9 times out of 10, if I say, what is your paydex score? Usually people don't know what that is. I had a gentleman who was in business for 39 years, had no clue what a paydex score was.
Well, again, you're talking financial terms, and people need to know what they mean. So
yes.
You want to tell us what is a paydex score? And
a paydex score is your business credit score. Okay. So for the banks, they're a depository. They want you to keep depositing money into the bank. Now, if you have a high paydex score, because they'll lend to you if you have a high paydex score, and of course, money in your bank account. Well, first of all, if you don't have a high paydex score, which most startups don't, you're asking for money, so you don't have money in your account, you get turned down. And then we want to talk about the SBA. Before the Great Resignation, they seen 1.3 million applications per year. After the Great Resignation, it was over 5 million. If you call the SBA and say, hey, what's your numbers? This is what they'll tell you. Out of the 5 million, they see 12%. From that 12%, they only approve 5%. For us, we feel that's atrocious because we approve 85% of our clients that come through. Now we want to talk about the VCs or the venture capitalists. We don't do what they do. They want to lend you money, but they want 15, 20, 30, even 50% equity in your company. If you don't know what equity is, that's ownership in your company. So I usually ask people, would you give up 15, 20, 30, 50% equity in your company? Usually everybody says, hell no, right? I want my company. For us at LendCred and at Moduscorp, zero equity. We don't want your company. That's a lot of work for us. And I like things that are less taxing. And it's helpful to the business owner to know we take zero equity in their company.
So you are a lender rather than an investor?
LendCred, they are the ones who have the lenders, and they have thousands and thousands of lenders.
Okay, so this is, and you put together the strategic plan so that you have a reasonable expectation of startup being able to pay back this loan.
That is correct. That's correct. And that's what the custom strategic plan is for. We can get our clients 5, 10, even 20 times as much money with us than what they could possibly do on their own. Because this is non-collateralized or it's not secured, okay? It's going to be anywhere from 10, 15, 20% for the interest rate, because let's just say you get a loan for $100,000 and 6 months down the road, you go, you know what? I can't pay this back. That's okay. You get to keep your home, you get to keep your car, you get to keep your 401k. We're not going to try to get that from you. But if you try to come back to us, that's going to be a little hard to do that. We're going to separate the business credit from the personal credit. It's actually protecting you. So even if you do decide, okay, I can't pay this, something has come up, it'll hurt your business credit, but it will not hurt your personal credit. Okay, because we're all about helping the client.
Okay, so this is an alternative to bank financing or angel investing.
Yes,
and
that's right.
Thank you so much, Greg Pruitt, for talking to us today. Is there any parting thoughts?
When individuals come to us, it's going to be a year of financial education. Okay, you're going to have a financial strategist. You're going to have a personal business consultant, a business credit consultant. We're going to teach you how to make money over and over and over again. This is a rinse and repeat process.
When people go looking for funding from another company like yours, what are they looking for?
They're looking for financial technology. That's what they're looking for. Okay. And for LendCred, we have a proprietary algorithm that no one has. Okay.
Thank you again, Greg Pruitt, for joining us today for Stuck, Time to Improv. I'm Mary Scott with Business Riff, and I want startup businesses to be wildly successful. See you next week.